Right, profits up 19% now compared to a year ago. Jeff, I call that real strong. Is it the driver of the market which has given us such a great January?
It's been the driver of the market, and it's also been that Jerome Powell folded like a cheap deck chair. So thank you.
You're welcome.
But also, you know, the one thing about earnings. Now, yes, earnings have been great. We've gotten about 40% of the reports already right now. And about 70% of those 40 have beat expectations. But we have to keep in mind, we had tax cuts, which were major, and we had massive share buybacks. So we had two events that are not going to make this necessarily sustainable.
However, suppose with all the big corporations, with all that extra money that they've taken on board, they now start a capital investment period where they spend big on capital equipment.
They could,
and
but
they're
they
going to
haven't
do
yet.
it.
They haven't yet.
They've started.
But what about wage growth? The fact that we did see wage growth climb higher, so that could be not necessarily a good thing for companies because they're going to be paying more in capex. But just to your point, you have what 159 names this week on the S&P, but the less hot ones like retail. So wasn't that a concern?
And you also have now, you have a lot of these expectations have scaled back a lot, and information technology is the biggest sector in the S&P 500, and they are warning every single day. Their numbers are down 9%.
Rolling his eyes, Jeff.
I give in. I absolutely give in. Are you permanently climbing the wall of worry?
No, but
that's good though. You want that with your money.
I have to give that side of the argument. The fact is, information technology is crucial, and they are seeing very, very difficult times ahead, and you have to give them consideration. They're not a little baby sector.
We're 3 minutes into the section where we've opened them up.